Have yet another weekly review or a weekly trading recap for you guys. We are going to quickly go over some of my stats from this week, and then I will dive into a couple trades that I want to discuss that just kind of support the theme of this week's video, which is trusting your edge. Now, again, cliche, and to be fair, a lot of the themes of these weekly review videos are going to be, very common and arguably cliche sayings that, in my opinion, are very true. They are cliches for a reason, and they really resonate with myself and a lot of the traders in our community that are trading these same systems and that are growing in their journey. And that is what I want to bring to you guys here on YouTube today. So what we are going to talk about first and foremost are quickly my stats. Last week's theme of the video was less is more. And you can see that on most of my days this week, I did trade a lower number of contracts or lower number of trades, 4 trades, 6 trades, 7 trades on Monday, Wednesday, and Friday. But on Tuesday and on Thursday, I took way too many trades, way too many executions, and spent way too much money on commissions on these days without a lot of really good to show for it. So that is another takeaway, or that is a big takeaway for me from this week's trading, is that I overtraded. Even though I made money, I took too many trades, which means that I jumped into setups that were arguably lower probability or a bit more cavalier, if you will, a bit more risky, and I paid the price for it. And of course, again, I did end up making money on those days, but I think it's important, and this is going to be another theme of the video, that we understand that we can have profitable days where we make, a good chunk of change, or, in my case right here, this is a lower P&L day where I traded way too much. My P&L was choppy, it was back and forth. And the idea here is that we want to be able to differentiate the profitability of a day with how good or bad it was, right? And what I mean by that is we can have good days where we lose money, right? Or we traded well, but our edge just didn't play out. And we can also have bad days where we make money, where we don't trade well and we break our rules and we deviate from our system and we end up green on the day. I think those are some of the most valuable days, because you can see how it is very possible and quite common to build bad habits on days like that, right? You can really reinforce bad habits like sizing up, doubling down, adding to losers, etc. on days like this, and your mind starts to associate the fact that you made money and that you dug yourself out of a hole, but it does not, resonate with a lot of people, at least at first, that you are making money and also making mistakes at the same time. I would argue that it is much better of a trading day to have, a small managed controlled loss where you took trades where most of your technical boxes are checked, versus a day where you make, 5K, for instance, but you take 34 trades and only half or less than half of those trades were pertaining to your edge or checking, a majority of your technical boxes. So I want that to be a takeaway for you guys who are watching this video. If you can be honest with yourselves and admit, even on green days, that you did things that are arguably bad for your trading, like what I mentioned a minute ago, like doubling down. Most people will double down on their trades when they are in the red, and sure, it'll work out for you sometimes, but you are truly hammering a bad habit into your mind every time you have a winning day where you have a poor strategy or poor execution, right? So keep that in mind and really think about that and analyze that in your own trading. How many days do you have where you're green on the day, but you executed poorly, you gambled, you took 50-50 coin flip setups as opposed to, 70-30 or 80-20 probability setups in your favor, right? So ponder on that. So I will scroll down a little bit so you guys can see the full calendar for this month, but these days were exactly what I was talking about just a moment ago. These days I made money, but I executed poorly, right? This day, Monday, I only made 4 trades and only locked in $436, but it was because I was using smaller size and I traded for a much shorter period of time, right? Not every day is going to be a banger, but I traded, as weird as it might sound, much better on Monday than I did on Tuesday, and I made more than 10 times the amount of money on Tuesday that I did on Monday, right? So let that sink in. It is so important to be honest with ourselves and continue to analyze our trading and really hone in on our flaws. And one thing that I'm going to show you guys real quick, just give me 1 second to pull it up, is a thread by a gentleman that goes by Trader Dante. So on this topic, I wanted to show you guys this thread that was posted yesterday by a trader that goes by Trader Dante. His name is Tom Dante, and he's been around for quite some time. He's a very well-known prop trader. You guys can look him up on YouTube. Got some great content, very off the cuff, which I like and I think is a valuable trait to have in this industry when we need to be as blunt as possible and as honest as possible with ourselves. So this is my edge, a thread. And Tom goes on to talk about his edge and what is helping him stay profitable and why he is different than most traders who fail. So he starts by saying that I don't think my edge lies in the fact I can spot a good level to trade at. This is important, but it is not his edge. My edge lies in the fact that I can sit on my hands when you can't. It lies in the fact that I follow my plan when you plan trades you never execute and execute trades you never planned. How good is that? And how true is that, right? It lies in the fact that I don't take emotions from the last trade into my next one. Exactly what I was talking about in my prior video with the Tiger Woods reference from Best Loser Wins. Again, definitely recommend that book if you guys haven't checked it out yet. It lies in the fact I understand the markets can remain illogical longer than I can remain solvent. Again, a cliche about the markets, but very true. It lies in the fact I don't focus on all the prices I could have traded at and only care about what I should do right now, right? We need to focus on the current moment, what the market is telling us, and basically wipe the slate clean from anything that has happened previously. It lies in the fact my trading day doesn't end with my last trade. It ends when I've journaled them all and learned lessons. I'm going to just underline that. Look at this. It lies in the fact my trading day doesn't end with my last trade. It ends when I've journaled them all and learned lessons. Your trading day should not end when the market ends. It should be over after you have journaled, whether it's a winning day or a losing day, and taken valuable information from that journaling that you can use in the next session. Read that again. It lies in the fact my trading day doesn't end with my last trade. It ends when I've journaled them all and learned lessons. It lies in the fact I study my mistakes when you bury your head in the sand. Most traders do not want to come to terms with the fact that they had a bad day, so they go do anything they can to distract themselves from their performance instead of putting their head directly, not in the sand, but into their trades and journaling and understanding where they messed up, where they made mistakes, and how they can improve. It lies in the fact I want to remember the things that you want to forget, right? Going off of that last tweet right there. Most people, they want to bury their head in the sand, but Tom and profitable traders in general, they want to remember things most try to erase, right? We want to forget our bad days. We want to forget our bad trades, but that's what we need to really dig into and understand that that is where our biggest improvements and our biggest changes are made, right? Disgust is an incredible motivator, right? It is one of, if not the most powerful motivators that exists in the world. If you look at your mistakes and you become disgusted, don't just walk away and, go to the gym and try to forget it. Sit down and journal your trades. Write down why you are disgusted with yourself, how you can learn from it, how you will take this information and improve the very next trading session. That is how you make the change that is necessary to grow as a trader. It lies in the fact when I want to add, you want to take some profit, right? Another very, very important theme that is talked about heavily in Tom Hugard's book, Best Loser Wins, where most traders, 90+% of traders, are fearful when they are in a trade that is going in their favor, right? They're afraid that their profit's going to be taken away. And most traders are hopeful when they should be fearful. For example, when they are in a trade that is in drawdown against them, right? They are hopeful that price is going to go back and get them in profit. It should be the opposite. We should be hopeful when we are in a trade that is going in our direction. We could find places to add. And at the very least, we should be aware that most people are thinking the opposite. Most people are fearful. As soon as price goes in their direction, they're looking for or thinking about where they're going to close it so they can eliminate the possibility of experiencing pain and having that trade going back against them. So think about that. That's something that is so important. And even if you're not always adding to your winning trades, it is very important to focus on what most are doing and do the opposite, right? If 95+ % of people are losing and they're fearful when they're in a profitable trade, try to be hopeful and think about it from a different perspective. And that, again, is how you differentiate yourself from that 90 to 95% of losing trades. It lies in the fact, I know I'm always one step away from acting like, I'm going to blur this word out, the C word, if you will. Don't want to get knocked from YouTube for pulling that one out. And you think you're one step away from being someone special, right? So it lies in the fact, I know I'm one step away from acting like an idiot, right? To put it a little bit more PG. And you think you're one step away from being the best trader in the world, an amazing trader, a revolutionary. But really, it's all a game of probability. And the way he puts it is telling it exactly like it is. We are only seconds away from making or having a momentary lapse in judgment that can be destructive, detrimental to ourselves, to our trading psychology, and to our trading accounts. It lies in the fact it's my job and your entertainment. That one I thought was very interesting because it's a really cool perspective, honestly. Most people, whether they want to admit it or not, they come to the market to increase their heart rate. They want to feel something. They want to hop in and get in on the action when price is moving really quickly. Tom treats it like his job. Professional traders that do this over a long period of time or trade consistently and profitably over a large sample size, they are not coming to the market like they go to a casino to throw some money down and gamble. We have an edge. We have a system. We wait for our system. We are patient for our edge. We are willing to wait to execute until the market gives us high probability setups, and most people are not, like he said up here. Where is it? It lies in the fact I follow my plan. When you plan trades you never execute, and execute trades you never planned. Most people, even if they come to the market with a plan, they deviate from it because they get focused on everything but just checking their technical boxes. That is something that's so incredibly important as a trader to understand that this is not entertainment. Profitable trading should actually be boring. So for those of you guys who are getting, an increasing heart rate when you sit down to trade, keep in mind that it's going to be pretty boring once you get profitable. And once it gets boring, that is actually a good sign that you are on the right track. When you don't have any emotions, when you're not, feeling like you are on a roller coaster ride when you're trading the market, it's probably a good sign. So in conclusion of reading you guys this tweet that I thought was, or this thread rather, that I thought was very valuable, it lies in these things and more. But these are a great starting point to understand how a consistently profitable trader thinks and how the 90 to 95% of losing traders think. It is 100% flip-flopped. The profitable traders are thinking one way. They are thinking the opposite of the herd, and that's what we have to do. Not only when reading the markets and, carving out a strategy from a technical standpoint, but especially from a psychological standpoint, we must defer from the herd. So I hope that you guys find this valuable. Feel free to pull it up or search or follow Trader Dante. Really entertaining and very smart guy that I think brings a lot of value to the trading community overall. So with that said, let's hop into a couple of these trades. I'll break them down for you, and I will send you on your way, hopefully with some value and some great information to take into next week's trading. All right, so the first trade that I'm going to break down, and it might be the only trade breakdown because this video is pretty long already, and I really don't want to talk your guys' ear off. I want to give you some good value and not make this content too excruciatingly long. So we're going to talk about this setup right here. This setup was a pro break that I actually entered a little bit late on. I broke it down on our Instagram as well, if you guys follow us. If you don't follow us at the.trading.network on Instagram, and you will see I post stories pretty much every single day and a lot of stuff that you guys won't see here on YouTube and even in our Discord. You know, there's a lot of unique content that I post on the Instagram as well. So shoot us a follow there. So with this trade, I noticed that we had, let me just back up a little bit so you can see how much time this was. So we had basically had this probe or this trend line, this upwards trend line getting created for how long was this? So it started at 10:16 and the probe didn't break until just an hour, a little over an hour after that, right? 11:19-ish. You can see that it broke there. So I was actually away on a mentoring call for a lot of this trend line getting created, so I didn't trade this much at all. I drew it at the end of the call, and I was thinking to myself, if this probe breaks to the downside, this is very likely going to offer up a large impulsive move that is, again, likely to go much further than these prior lows. And my reasoning for that was because of how long this trend line was created for. You know, as intraday traders, if a trend line is being respected for an hour, you know that there's a lot of liquidity being absorbed, whether it's going to continue to work or whether it's going to break and, you know, give us a little melt to the downside. That is something important to consider. Time, and that's one reason why the market profile is so amazingly helpful, is because time is a big factor when it comes to market activity and the two-way auction process. When you have liquidity absorbed for basically an hour, respecting a trend line like this, when this trend line breaks, it is going to be very likely a powerful move, and that is exactly what we got. So you can see if I zoom in here, even though I entered late, technically the probe broke on this bar, and we confirmed with another strong bearish bar right here. I entered right when this bar closed, and we basically took out that prior low. This was a great risk to reward opportunity because I knew if we broke back above this trend line that the probe was not going to get the reaction that I was looking for. So I entered here as soon as this broke the prior low. I had my stop loss above the probe for the reason that I just mentioned a few seconds ago. And my target was this major level down here, R2. And we also had the initial balance high from the November 8th session and the overnight high right below that at 11,104. And you can see that we had VWAP down there. So there were a lot of major levels. And you'll start to notice, especially if you use market profile as an edge, that these levels become magnets for liquidity. Right? When we break major levels, whether to the upside or the downside, price moves through areas that I like to call no man's land very easily, or much more easily compared to dense areas of liquidity, right? This up here, for example, is a dense area of liquidity. We have multiple major levels. We have Fibonacci pivot R3, and we also have the value area high from November 8th. When we have major levels like this, that typically tells us that there are a lot of resting orders, or there's a lot of interest from larger players in that area. When that happens, it basically just means that it's much more difficult to move through that area, right? It's going to take a lot more power to chew through a dense area of liquidity, right? I kind of think of it like a brick wall, right? And each time this dense area of liquidity gets tapped, it chips away at that brick wall. And that's kind of what we got in this area on this trend line, right? So liquidity was being absorbed, right? And each time this trend line got tested, it was chipping away at orders there, right? And price can only test a level so many times before it breaks and moves to the next area of dense liquidity. So unfortunately, I did not get this trade on recording, but I was able to grab some screenshots. And I think this shows how important it is to understand how liquidity works, because if you can understand how the herd will just buy this over and over again. And yeah, you might get some quick scalps off of it. But in my case, I missed these scalps or these tests, and I was looking for a larger impulsive move. If we could not get back up to the value area high, very likely that we're moving back to the point of control and then lower this prior initial balance high and the overnight high there. So this probe broke, and we've got, you can see how there's barely any buyers, right? That means that there's no liquidity. When price moves so ferociously like this, that means that there's no one on the other side to put up bids, right? There's no buyers until we get to the next major area of liquidity. So when you see this happening, when you see probes either to the upside like this or to the downside, something like that, for example, watch for them to break in the opposite direction, right? So if you have a trend line moving to the upside, watch for it to break to the downside, and that will offer up high probability trade opportunity. And on the flip side, watch for a downside or a downwards trend line to break to the upside, and that will offer great upside opportunity. So you can see here, excellent candlestick structure. You get the local low. You've got the oscillators curling and crossing up. You have the volatility indicator indicating that volatility is actually about to cool off. So if price is moving down and volatility is cooling off, then you're likely to get a nice little reaction to the upside there. So this is something that I wanted to show you guys. This is an area or an example of how I trust my edge no matter what. I get into a trade and I allow it to work out regardless of whether or not my entry is perfect. This wasn't a perfect entry. Perfect entry, either would have been here. That's like A++ entry, or even here. So I was pretty close, but it by no means was a beautiful entry, but I had great risk to reward, right? Look at where this moving average is, 194. So maybe above this probe, I might be risking 15 points, probably between like 10 and 12, I would imagine, right? Somewhere around 96 is where my stop loss was. So in at 84, stop loss is 96, call it 12. Even if you want to call it 15 points, my next major area of liquidity is down at 115. That is amazing risk to reward. And it did end up making its way down there. And this was basically a one and done trade. I was pretty busy this day and I had a lot of mentoring calls, but I could not pass this trade up. And I trusted my edge immensely. And that's why I continued to hold. That's why I didn't close here, because I understood that the liquidity was absorbed for an extended period of time. And when a probe breaks like this and you have an hour plus of price action just absorbing liquidity over and over again, it's going to be larger than a 10, 15 point move, right? That's why you can use this information to your advantage to know when the probability is higher for one of those home run trades, if you will. And you can see here, I was over 40 points in profit at this point right here when price was at 141, and I continue to hold it, right? Because this is no man's land. Once we break the current POC, no major market profile levels, no Fibonacci pivots. I mean, we sliced through this VWAP deviation like a hot knife in butter. And that just further gave me the confidence in my edge to continue to hold to that next major area of liquidity. And that's why we use these tools. We use Fibonacci pivots in combination with market profile levels, in combination with trend lines and momentum oscillators that show that price continues to have room to the downside. That's why we use volatility oscillators. I'll show you guys this as well. Check out the BBWP right here, curling and crossing to the upside at the same time, or right around us putting in this top, right? I missed this top. This would have been the best entry, right? Because you could have even put a stop loss above these areas. But this gave me the confidence to still get in. The probe broke. We had volatility still expanding and major levels to target. And that is all we need to gather high probability setups, to trust our edge, and to stay with what the market is telling us, and to not get sucked into the euphoria of being up, $2,500 in a matter of 2 minutes or however long it was. And that's how you stay focused. That's how you can scale your account up. That's how you can deal with seeing larger swings in P&L, both against you and for you, and remain edge focused. So I think that this is going to be a very valuable information for you guys. I know this video was a bit longer, but it's for good reason. I do my best to make these videos as short as possible while packing as much information in as I can. But I will say that only so much can be said in a short period of time. And really, if you want to understand these arguably more advanced concepts, I think it's important to put the time in and, watch some videos like this and really just understand and take notes of what you can see and the patterns that you will be able to consistently notice and take advantage of on a daily basis in these markets. So I will wrap things up here. I think we have gotten enough information out. I was going to go through a couple more trades. You can see here, took some other shorts. There was another one, a bit more cavalier. Here is another short trade. Very, very similar situation. A late entry on a pro break, but we had major levels here. You know, it was basically pro break in and around the op zone. I even entered late. I entered once this prior low broke. And same thing. Once we break these levels, we're into no man's land until our next major level, which in this case was the session low from November 8th. So I guess you guys got a little preview there of some of the other trades that I took this week. Really nice opportunity zone trade, good confluence in the momentum oscillators. We had good confluence in the volatility oscillators as well. And I was able to lock in, what was that, about 30, 35 points. I think I closed it right around this area on NQ5 contracts, about $3,500, $3,400, something like that. So that was it, you know, but I think the main lesson or the main idea was portrayed pretty well with just breaking down this one trade. So if you guys enjoy this content, please feel free to let me know. Please drop a comment down below. If you do like what you see here and you want to be notified when we post content, please feel free to like, subscribe, and click that bell notification to be notified every single time that we post videos. If you want to learn more about what we do overall at the Trading Network, please check out thetradingnetwork.io, where you can purchase access to our TTN Pro Trader bundle, which includes the Fundamentals of Futures Trading course, the TTN Proprietary Indicator Package, as well as lifetime Discord access. You can, of course, purchase those products standalone on the website as well, in addition to one-on-one mentorship with me. And if you guys have any questions about any of the things that I mentioned, you can email us at info@thetradingnetwork.io. You can drop a comment down below. You can shoot us a DM on Instagram, Facebook, anywhere you can find us. We are here to help, and I look forward to seeing you in the next video. Cheers.